Hi all, welcome back to new video. So let's discuss about what is asset management. Asset management is the process of organizing, monitoring and selling a firm's asset. So a company can own different types of asset. It can be cars, machineries, computer and some other electronic equipment. All these are considered as fixed asset, and fixed asset can be used for multiple years. And as the time passes, the value of the asset reduces. So the evaluation of the assets makes an understanding that the company is in gain or loss. Firm need to handle different types of assets, which becomes more complex or challenging. So in such cases, this can be managed using Odoo 16 accounting module. So let's consider an example. An organization has bought a computer for gross of 1,200 and decided to amortize it for 3 years. And the salvage value is set to 300 and the residual value has turned into 900. So the depreciation can be easily calculated using Odoo. So let's check how to manage the asset management in Odoo 16 accounting module. So in order to manage the asset, just get into the accounting module, and under accounting tab you can see asset. So if you want to create a new asset for your organization, you can click on new, and so once you click on new button, you can see that a new window is visible here, and here we can give or specify the name of the asset. So let the name of the asset be laptop, and here we can see two tabs, that is asset and bills. So asset tabs basically shows the asset values, current values, depreciation methods, accounting details of the asset and value at import. Okay, and so let's set the value, that is the original value of the asset laptop is 1000, and you can specify the acquisition date, that is the date at which the product or the asset is created. And here we can also specify the asset model, that is to which model does this asset belongs to. And here we can also specify the current value, that is not depreciable value. So if I'm letting 100 as a not depreciable value, you can see that till 900 the value will be depreciated, and beyond that the value won't be depreciated. So there will be a minimum value of 100 that should not be depreciated. Okay, so currently I'm not setting any value, so the complete amount can be depreciated. And as you have choose or given the original value as 1000, the book value will be automatically configured by Odoo. And here we can use different methods like straight line, declining, then straight line. And you can also set the duration that to amortize this asset. And you can also use computation methods like now pro rata, constant periods based on days per week and days per period. And you can also set accounting details, like you can specify the company, that is to which company this asset belongs to. And you can also specify 3 accounts which are mandatory, that is the fixed asset, which shows all the value of the purchase of this asset. And you can also provide a depreciation account, and you can also set as an expense account. So let me give a fixed asset account, and you can also specify a depreciation account and specify the depreciation account, and you can also give an expense account. And the journal that we are using here is miscellaneous operations, and you can also specify the value that to be deprecated. And once you get into the internal link of the depreciation account, you can see we have set a code for this account, and the name of this account is depreciation, and we have 2 tabs called accounting and automation. So here you can also specify the type of this account, that is non-current asset, and you can also specify the tabs that relates to this account. Can also provide tabs for the easy filtration of the account, and can also provide allowed journals. And you can also provide account currency. Then you can also make this account for reconciliation. And if you are setting this account as deprecated, then this won't be allowed to use in some cases. So Let's discuss now the automation. So asset options that provided by Odoo is of three types, that is know, create in draft, and create and validate. So if you want to automate the asset, you can choose the options that is create in draft and create and validate. So if you are manually creating the asset or computing the values of the depreciation, then you can choose no. So currently I'm setting the value as no. So let me save this option. Now uh, let's back to the asset that we have created. Here now we have to specify the asset model. So in order to specify an asset model, we have to first create the asset model. So let's go to the configuration menu, and under the management section you can see asset models. So let me create a new model by clicking the new button. So you can specify the model. So let the model be electronics. And you can also specify the methods. That is, the method that I'm going to use here is straight line. And the duration that I'm going to set here is 5. And the computation using here is now pro rata. And you can also specify the accounting details like the company, then the account that is used. So I'm using fixed asset. And you can also specify the depreciation account. So you can use the depreciation account, and as well as you can also specify the expense account, and you can also use the journal that to record the values. So miscellaneous operation is a journal that we are going to use for this asset model. Now just go to the accounting tab and you can see assets, and let's specify the model. So electronic is a model. So once you choose a model, the values will be automatically configured. That is, the details that we have given in this asset model will be automatically configured under accounting. Okay. Now we are manually calculating the depreciation value of the asset. So let me save this asset, and in order to calculate manually, you can click on compute depreciation. So once you click on compute depreciation, you can see an additional tab called depreciation board is visible now, and we can see the depreciation of the original value over the usage of the product for 5 years. And this shows details of depreciation date and a reference, that is the depreciation amount, and the cumulative depreciation. Cumulative depreciation is nothing but that is the sum of depreciation value. And you can also see a deprecable amount or the deprecable value by over the period. So let's make the calculation using a calculator. For that, take a calculator. So here you can see that the amount that is deprecated is 200. And as we have choose the method as straight line and the computation as now pro rata, there will be a linear depreciation over the 5 years. So the amount that will be deprecated in the first year will be 200. So how that is calculated is the original value of the product or the asset is 1000, and we can divide it by 5 because we are using the asset for 5 years. So each year the amount that will be deprecated will be 200. That is the amount shown as 200. And you can see the cumulative depreciation. So the depreciation begins in the month of 2023. So there is no other amount that to be calculated with the cumulative depreciation. So currently we have only 200 in the first year of the duration. So 200 is considered as the cumulative depreciation, and we can see deprecable value as 800. So amount of 200 will be deprecated in the first year of the duration. So you can subtract it from the original value. So you will get a residual value or the deprecable value for the further duration as 800. Now we can see in next year also an amount of 200 will be deprecated. So you can see the cumulative depreciation as 400, which means that the amount is calculated. That is the amount that is depreciated in the first year of the duration plus the second year of duration is considered, and the cumulative depreciation is calculated. And here you can see the depreciable value. So again, a $200 is depreciated in the second year of the duration. So you will get 600, and 600 is considered as a residual value. And further depreciation will be made from this value, that is 600. And so we can see again a 200 value is depreciated. So you can see that again in the third year of the duration, an amount is depreciated, and you can see 400 is set as a depreciable value, and the total amount or the cumulative depreciation is, that is for 3 years, the amount that is depreciated will be the sum of depreciation. So the values that will be considered as 200 plus 200 plus 200, and that will be considered as the cumulative depreciation and set as 600. And here we can see again in the fourth year of duration, you can see an amount of 200 is depreciated, and an amount of 200 is depreciated. So you can choose, now the amount is set to 400, right? So an amount of 200 will be again depreciated. That is, as we choose a straight line as a method, we can see a linear depreciation. So 200 is again depreciated, and the cumulative depreciation will be 200 plus 200 plus 200 plus 200, and it will be set as 800. And the depreciable amount currently here is 200. So in the final year, that is the last year of the duration, 200 will be the depreciation amount, and when you calculate the depreciation amount, you will get the cumulative depreciation. And from this, we can make a conclusion that there is no amount to make furthermore depreciation. Okay, so this is how asset management done for the method straight line with the computation no prorata. And let's discuss the second method, that is declining with the computation no prorata. Okay, so for that, just go back to the assets and choose the, here you can choose the assets, and here you can change the method as declining, and you can choose the computation as no prorata. So when you choose declining as the computation, you can see a declining factor can be set. So we have set a 30% of declining factor, and you can also set a duration of 5 years. And let's click on compute depreciation. So once you go to the depreciation board, the value will be changed, and the depreciation or depreciated value of the asset is visible here. So we'll show the calculation through a calculator. So you can see the depreciation date, reference, depreciation amount, cumulative depreciation, and depreciable value. So here we have choose a method as declining, and when you choose a method declining, we can see that a declining factor of 30% is set for the duration of 5 years. So half the depreciation amount is set as, like, the original value of the asset is 1000, and we have a 30% of declining factor. So 300 is the amount that will be depreciated in first year of the duration, that is in the year of 2023. And you can set the cumulative depreciation as 300 because we don't have any amount that is to be depreciated in the previous years. Okay. And here we can also set a depreciable value, or we will get a depreciable value as 700, as 300 is depreciated from the original value of 1000. So you will get the residual value or the depreciable value as 700. So now for the next year of the duration, for the second year of the duration, the amount will be depreciated from this 700. So we will consider again 30% of 30% of 700. So you will get 210 as the amount that will be depreciated in the second year of duration. And here you can see a cumulative value, that is 210 plus 300. You will get 510 as the depreciation amount, and here you will get 490 as the depreciable value, which means that here you can see when you subtract the 210, that is the depreciation amount, from the depreciable value, you will get 490. Okay, here you will get 490. Now we have to consider the 30% declining factor of 490. So we have to consider the 30% of 490. So you will get 147 as the depreciation, and the cumulative depreciation will be 147 plus 210 plus 300. 300, and you will get 657 as the cumulative depreciation. And now we need to get the depreciable value. So what we have to do is 490 minus 147 need to be calculated. So 490 minus 147 will be the calculation, so that you will get 343 as the depreciable value. Now we have to again consider the 30% as a declining factor of 343. So you will get an amount of 102.90, and we need to calculate the cumulative depreciation. So just add up all the amount, that is all the depreciation amount. So 102 plus 102.9 plus 300 plus 210 plus then 147, you will get 759.9 as the cumulative depreciation. And here you can see 240.10 as the further depreciable value. So when you subtract 343 minus 102.90, you will get the depreciation amount, which is specified here. And for the final year, we will be considering the depreciable value as 240.10. So when you add on this depreciation amount, you will get the cumulative depreciation as 1000. Okay, now let's discuss the other method, that is declining then straight line. So let me calculate or compute the depreciation. So once you click on compute depreciation, here you can see the value is changed, and till a period the value will be declined, and from there it will be straight line. So let's check the calculation of this. As we choose the method as declining and straight line and the computation as pro rata, we can see that first year of the duration, an amount of 300 is depreciated. That is, you can see that when you use declining, we have set 30% a declining factor. So 30% declining factor of the original value will be, that is 1000 into 30% declining factor is 300, and you can see a cumulative depreciation as 300, and you will get a depreciable value as 700. Okay, so 1000 minus 300 will be 700, and again you have to consider the 30% of 700. So you would get 210 as the depreciable amount, and you will get cumulative amount as 510, that is 210 plus 300. Okay, so you will get an amount as 510, and the amount that to be depreciated in the next years or in the upcoming years is important, that is calculated like 700 minus 210 will be, yeah, you will get 700 minus 210 is equal to 490. So now when you consider 490 is 30%, you can see that we will get 147 as the depreciation amount. But this won't be applicable. Why? Because we have choose a method as declining and straight line. So it will consider the declining method for first 2 years of the duration, and later on we will be considering the depreciation as linear. That is, we know the original value of the product is or the asset is 1000. So the minimum value that to be depreciated in each year is 200. So up to 2 years, the depreciation will be based on declining factor, or the method will be declining, and from third year of the duration it will be linear in its declining. So we can see that 1000 divided by 5 is 200. So the minimum amount that to be depreciated in the further year will be considered as 200. So here we will get 710 as a cumulative depreciation, that is 200 plus 210 plus 300 will be equal to, 300 plus 210, you will get 710 as the amount, and you can see 290 as the deprecable value, that is, just erase this, you can see 490 minus 200 will be 290. Again, we can depreciate the minimum value that to be depreciated is 200. So we will consider 200 as the amount that to be depreciated, and you will get a cumulative depreciation as 910, as it's the sum of 290 plus 300 plus 210 plus 200 plus 200. So you will get 910 as the amount that to be depreciated. Now you will get 90 as a depreciable value, as we have 290 as a depreciable amount. From that we have to subtract the amount that is depreciation amount, that is 200. So you will get 90 as the amount that to be depreciated in the last year of the duration, and you will get a cumulative depreciation of 1000 by adding 90 plus 200 plus 200 plus 210 plus 300. Okay, so you will get 1000. Now let's check other methods, that is, just go back to the assets and change the method into straight line, and you can set the computation as constant period. So when you choose constant period, you can see the pro rata rate date will be set here. So let me choose the date as 1st of March. Okay, now let me save this and just click on the computation, so that the value will be computed or the depreciation amount will be computed by Odoo. So when you go to the depreciation board, you can see the depreciated value based on period. So let's check the calculation. So as here we use the method as straight line and computation as constant period, we can see the calculation. That is, we have 5 years the period, and that is from 2000 2023 to 2028. And we can see the value that are depreciated. We know the actual value of the asset is 1000, and that's divided by 5 year, that is the duration. So we will get an amount of 200. And as we have set the date as, like we have set from 1st March that the depreciation should occur, we know that a month will contain a total of 12 months, right? I mean, an year will contain a total of 12 months. So let's divide it by 12. So you will get 16.6667 as the amount that to be depreciated in each month. Now, we have to calculate from the from March onwards till December, and we have already finished the month. Like January and February is already over, and we have set a depreciation date from, that is the acquisition date from March onwards, 1st March. So we will be considering March. So we have only 10 months left in 2023 now. So you have to calculate this with 10 months. So into 10. So you will get 166.6667 as the amount that to be depreciated in the year of 2023. Now, the depreciable value will be, now let's round this value and use it as 166.67. Now use the original value and subtract the depreciable value, so that that is it. So that you will get 833.33 as the depreciable value. Now in the next year we have a full year, so we will be considering 200 as the amount that to be depreciated. And you can see the cumulative depreciation will be the sum of the amount of 166.67 plus 200. So you will get 366.67, and the upcoming years also you will get an amount of 200 as a depreciation amount. So you will get the cumulative depreciation as we'll show you here, 166.67 plus 200 plus 200 plus 200 is equal to 500. 66.67 will be the depreciable value, and you can see that the amount that is depreciable value is 633.33 minus 200. That is the amount that is depreciated. So you will get an amount of 433.33. And again in next year also the amount that will be depreciated is 200. So you will get 766.67 as the cumulative depreciation, as it's a sum of 166.67 plus 200 plus 200 plus 200. And you can subtract again 200 from the depreciation amount of 433.33. So you will get 233.33 as the depreciable amount. And again we have an amount to be depreciated in the year of in 2027. So you will get 33.33 as the depreciable amount, and that amount will be considering for the next year. So you can see when you sum all the depreciation amount, you will get 1000 as the cumulative depreciation. Now let's check the method as straight line itself, declining, and we are setting constant period as the computation and setting the declining factor as 30, and you can use the duration as 5 years itself. Now let me change the value as 10,000 and letting a value not to be depreciated, that is 1000. So as you choose the original value here, you can see the book value will be 10,000, and I have set here a not depreciable value. So now the value will be calculated. That is 9,000 will be the amount that to be depreciable. So once you click on compute depreciation, you can see the calculation of how depreciation happens for the asset laptop with the method declining and computation as constant period. So let's check the calculation using a calculator. So take the calculator for that. Here we have set the declining as the method and computation as constant period, and we have set the original value of the asset as 10,000, and we have also set 1,000 as the depreciable amount, so that up to 9,000 the value of asset will be depreciated. So here we have to consider 9,000, 30% declining factor of 9,000. So 9,000 into 30% is equal to 2,700. Okay, this is for 1 year, the amount that to be depreciated. We have 12 months in a year, so we have to divide it with 12. So let me divide it with 12. So you will get an amount of 1 month. That is the amount that is depreciated in 1 month. And we have set the acquisition date from March. So we only need to consider 10 months because January and February is already over, right? So we have to only consider the months from March to December. So we have only 10 months left in 2023. So let's multiply it with 10, and you will get an amount of 2,250 as the amount that to be depreciated in the year 2023. Now you can subtract this from 9,000. So you will get the depreciable amount as 6,750. And again, we have to consider the 30% of this, so that you will get an amount of 2025 as the amount that to be depreciated in the next month. And you can see the cumulative depreciation as the sum of 2025 plus $2,250. Okay. Yeah. You can see 4,275 as a cumulative depreciation. And let's check the depreciable value. That is, we have 6,750 minus that is 2025 as the depreciation. So you have to subtract the amount. So you will get 4,725 as the amount. And again, we have to consider the 30% discount, percentage declining factor. So you will get an amount of 1,417.5 as the depreciation, and you will get the cumulative depreciation as a sum of 1,417.5 plus 2025 plus 2,250. So you will get the depreciation amount as 5,692.5, and you can see when you subtract 4,725 minus 1,417.5, you will get an amount of 3,307.5. Okay. Now we have to again consider the 30% of declining factor. So you will get an amount of 992.25 as the depreciation, and when you calculate all these together, you will get the cumulative depreciation as 6,684.75. And when you subtract 992.25 from 3,307.5, you will get 3,307.50 minus 992.25, you will get an amount of 2315.25. Okay. And again, we have to consider the 30% of declining factor. So you will get 694.575 as the depreciation amount, and we will round it and use it as 694.58. Okay, letting it to be a rounded value, and you can subtract this from 2315.25. So you will get an amount of 2315.25 minus 694.58. You will get an amount of 1620.67. So in the final year, we will consider this amount, and you can see the amount that is depreciated. Take the sum of depreciation amount and you will get the cumulative depreciation in the final year. And now let's go to the assets and change the method from declining, then straight line. And let's save this and compute depreciation. And let's check how the depreciation takes place. For that, let's do the calculation. We have 9,000 as the value of the asset, and that will be depreciated, and need to consider the 30% of declining factor. So you will get 2,700 as the amount. This is the amount that will be depreciated for 1 year. But here we have set the acquisition date from March. So we only need to consider from March to December. So first we need to get the amount that will be depreciated in 1 year, for a month. So we need to divide it with 12. So you will get 225, the amount that is depreciated for 1 month. Now we only need to consider for 10 months. So just multiply it with 10. So you will get 2,250 as the amount that will be depreciated in the year of 2023 for 10 months. Now you can subtract this amount from 9,000. So you will get the depreciable amount. So just subtract it from 9,000. So you will get a depreciable amount that is 6,750. And you have to again consider the 30% of this value. So for that, 30%. So you will get 2025 as the amount, and you can see the cumulative depreciation as a sum of 2025 plus 2,250, and that will be equal to 4,275. And here you can subtract this from the depreciable amount. So just subtract it from 6,750. So you will get an amount of 4,725. And now when you consider the 30% of this amount, you can see 1,470.5 is the amount. But this cannot be deprecated because here we have used the method as declining and straight line. Okay, so we know that when you divide the depreciable amount by the duration, it is 5 years, you will get 1,800 as the amount that to be depreciated for 1 year. That is 1,800 will be the amount that to be depreciated for an year. Okay, so here in the next year we have to set a minimum depreciable value as 1,800. So now you can subtract this from 4,725. So you will get an amount of 2,925. And if you consider the 30%, this will want set of reach to the minimum depreciation value. So as we choose this straight line method also with declining method, we have to consider the minimum amount that will be depreciated. So again, we will consider 1,800, the amount that will be depreciated, and you can subtract it from the depreciable amount. So you will get 1,125 as the depreciable value, and you can see the cumulative depreciation as the sum of 2,250 plus 2,025 plus 1,800 plus 1,800, that will be equal to 7,875. And you will consider the final depreciable value and will take to the year 2027. And when you add up all the depreciation amount, you will get the cumulative depreciation. Okay, now let's check the final computation that is based on per days. So let me change the method as straight line, and let's check the calculations. First, we need to change the method into straight line, and this is very similar to that of the methods that we have discussed. So we're not discussing using calculator. So the difference is that we have to consider the depreciation of 1 day. So we can calculate the value of depreciation for 1 day by taking the value as 9,000. That must be divided with the number of days for the 5 years. So you will get the amount that is for 1 day. And from that, the other steps are very similar that of the steps that we have follow for the other computation with the method standard. So I'm not discussing that. So when you just look on the calculations, you can see the depreciation will be based on days, and the cumulative depreciation can be calculated with the depreciation amount, and depreciable value also can be taken by subtracting the value from the original value. Now let me change the method as declining, and you can choose the depreciation board by clicking compute depreciation. So again the value will be changed, and you can see the depreciation values and cumulative depreciation, and this will be declining, constantly declining, and once it reached a level, you can see that the depreciation amount will be calculated, and the cumulative depreciation will be set to the amount that we have set as the depreciation amount. And now when you change the method as declining, then straight line, and click on compute depreciation, when you go to the calculations, you can see that to a particular point the amount will be declining, and there will be a minimum value that should be declined for an year. So after declining, this will follow a fashion of straight line, which means that there will be a linear depreciation in the amount. So this is how asset management and using of different methods and computation is done in Odoo. So if you have any doubt regarding this, please do give a comment. So thank you for watching the video. Hope it was helpful.